What is going on, investors? Hopefully, you guys are having a great day out there. Time to talk about Alibaba, which just reported their Q1 earnings before the bell today. And over the last year, stock's actually been a lagger. If you look at a lot of technology stocks, even e-commerce stocks, they have been soaring over the last year. Alibaba up just 9% year to date, down about 5%. And then as we see today, down another, we'll call it 4.5% during the regular trade. So we'll talk about that. We'll talk about if this company is set to maybe make a rebound because it has not been performing well. We'll talk about the Q1 results, which are a little bit of a miss in terms of their profits, but we'll talk about why that is. We'll talk about some of the other expectations on there as well. We'll jump into the numbers. We'll dive into these as best we can. I'll be honest with you, this company doesn't do a great job of kind of organizing this. Could be kind of a cultural thing, just kind of a Chinese versus US accounting way of doing things, but we'll talk about that. I'll try to give you as clear a picture as you possibly can get when we take a look at these things. And then we'll get over the stock chart because, to be quite frankly, this thing has been ugly. This thing was up over $300 per share, and now we're all the way down here at about $209 per share. But guess what? It is pulling into areas of where buyers could potentially step in. Of course, it's blown through a couple areas as well. We'll talk about the stock chart as well. Can you buy the dip on this one? Not that we're trying to pick the exact bottom with a stock like this, but is it making a bottoming formation? We'll talk about that. This is potentially something that we see there. Now, Alibaba's stock obviously dipping during the regular session and kind of underperforming the broader markets and broader e-commerce stocks over the last year. Mixed Q1 results. Cloud revenues came in at $16.8 billion. We'll see that. The expectation was for $18.4 billion. And I said dollars. This is actually in the Chinese currency. We'll talk about that when we jump over to the press release as well. We get a dollar figure and we get the local Chinese currency as well. So forgive me if I kind of mix the two up out of habit and things like that. Now, the loss from operations, which we'll see here, came in at about $7.6 billion. That's a loss. That is the biggest loss that Alibaba has had, I think, in like a decade. They have not had a type of loss like this in a very long time, but most of that was due to an antitrust fine of $18.2 billion. So the Chinese slapped Alibaba, which is kind of unique. Alibaba, it being one of the Chinese biggest and greatest companies, the government slapping it around with an $18.2 billion fine. I don't necessarily think that that is something that they want to do on a consistent basis because, as we've seen, the stock really didn't perform well since that fine was announced. Now, without that fine, they would have made about $10.6 billion in the Chinese currency. We'll see evidence of that as well. Now, what I want to talk about first is revenue. So the way Alibaba breaks it out is they give you kind of a revenue. This is a figure that we've gone over here on the show. And then what we'll do is I'll talk about profit. So they give us total revenues here and they give us some expenses. We'll see that net income, kind of income from operations and stuff like that. But I wanted to give you an idea segment by segment first on Alibaba. So they've got this core commerce, they've got this customer management here at first, and then they've got this others, which is interesting that they add the S there. It's kind of a Chinese thing, but you've got this 2 here showing a footnote that this is mainly Sun Art, which is a big business for them, Tmall Supermarket, Fresh Pino, and some other lines as well. Forgive me if I'm mispronouncing some of this stuff as well. So we've got 3 months ended here. We've got 2020 is our left-hand column, 2021 is our right-hand column. This RMB is the Chinese currency. That's the left-hand column. The most current quarter is the right-hand column. And then we've also got this US. So that is in United States dollars. All these figures are in millions. So this column here is $9.7 billion. What I thought was interesting is Alibaba has really shifted their business to now it's 50-50 on this top core commerce. Almost. It's not quite 50-50, but it's very close. We see last year in 2020, it was 40% this customer management stuff, and then it was 22% this others, and now it is almost virtually identical, okay? This has grown to, it was $9.7 billion. Others grew to $9 billion, whereas in the last year, it was flip-flopped, okay? The customer management was about 50% larger than that. So Incredible that they've been able to grow this other segment by 134% year over year and maintaining their top line business by 40%. Gives them a little bit better diversity, in my opinion, as well. Now, they've got these other business lines as well. Those are growing at a steady clip as well. We're seeing growth of 74%, 21%, 70%, 100% here, 50%, 62%. These still maintain, though, their percentage of revenue inside the company. They're almost identical year over year. Strong revenue across the board. You get down to this total core commerce in terms of our revenues. They went from 93 billion, that's in the Chinese currency, up to 161 billion. Now, in the United States currency, that is right at about $24 billion in a quarter. So they're on a $100 billion run rate. If you annualize that number out times 4, yeah, you're right at $100 billion in terms of total core commerce revenue. Now, it's not the only part of their business. That's how impressive this company is. You got this cloud computing. Now, it came in under estimates, okay? The $16.7 billion right here in 2021 was under estimates. That is about $2.5 billion. But what I will say is you did grow 37% year over year. And when we look at the United States cloud providers, Amazon and Google and Microsoft. Obviously, there's a plethora of other cloud computer offerings here, but those are the big three. They grew in that mid 30s to as high as 50% for Microsoft Azure, I think was right at 50%. So AliBaba is growing their cloud computing business at the rate you would actually expect, at least compared to what you see here in the United States. Now, they've got this digital entertainment business as well. That's a $1.2 billion business as well. And then you've got some innovation and some other revenues, which is not a whole lot, but everything across the board. That's what's impressive about AliBaba is their entire business across the board is growing year over year, just showing you that this is a dominant company and maybe why they got levied such a large fine by the Chinese government. So you've got this total revenue coming in at $28.6 billion when you take in the totality of their business, not just their commerce, but also their cloud computing, digital media, things of that nature. Impressive number, obviously, and that is up 64% year over year. That type of growth is phenomenal. I don't need to tell anybody watching this that. Now, let's take a look at, from a cost perspective, what we've got going on here. I told you that this company swung to an income or a loss from operations. What I thought was interesting was we talked about how they had this big $18 billion RMB, that's in the Chinese currency, fine. I thought it was interesting that it appears they counted for that up here in the operating side, whereas normally you would see that down in here. Some kind of fine or some kind of one-time thing would be down here, and it would impact net income, okay, after you factor in taxes and other expenses that aren't necessarily related to operating the business. Maybe that just the laws in China in terms of accounting require them to recognize this as an operating expense. So a fine from the Chinese government is actually on this operating side, okay? And that caused this loss from operations. So we pull down that fantastic $28.6 billion worth of revenue. This is the most recent quarter here. And then we subtract our product expenses. We subtract sales and marketing, general administrative, some amortization and things like that. And we get down to this income or loss from operations coming in at a negative $1.1 billion. But as we talked about, this would have been positive if it wasn't for the fine. So they wrapped the fine up for some reason up in these operating expenses, which again might be something that they had to do. You see, last year, this is in the Chinese currency, they made 7.1 billion. In this most recent year, they lost 7.6 billion. As we talked about, without that fine, they would have made 10.6 billion Chinese dollars or Chinese currency. So we would have went from 7.1 to 10.6, but because of the fine, we went from 7.1 down to a negative 7.6. So here's the deal. So obviously these fines are bad for the stock in the shorter term, maybe even the intermediate term. But one thing that we have to realize is while this was a big penalizing fine on this company, It certainly didn't derail their growth and likely won't derail them going forward. We also have to assume, and this is me not knowing the Chinese government very well, but just from an outside perspective, it doesn't make a ton of sense for the Chinese government to constantly be slapping down one of its largest and most iconic companies. It would be like the government here in the United States, while they lip service that they're going to slap down an Amazon or a Microsoft, or, they did do it to Microsoft for a while there. And we saw the devastating effect it had on Microsoft's stock price for a long time. Wouldn't necessarily anticipate that to continue, but obviously it's happened and it is a risk. So let's move over to this stock chart. This thing bottomed out at last year. So most stocks, were kind of peaking right before the virus and things like that. And Alibaba kind of, like all stocks, made a low down here at about $170, and then it snapped back. And by snapping back, we went from 170 on this one all the way up to $319. But this thing has pulled back over $100 per share since then. So if you bought in any of these upper quadrants, you have been absolutely destroyed on this investment. Now, what I have seen interesting here is the 209 mark acted as support here. It was support and kind of resistance all along here. And it was our initial, so this stock went from 319 and started falling. Yeah, there was some head fakes and kind of coming out of that, but it bottomed right at here at 209 and snapped all the way back to 270. Here we are again retesting 209. So this is a critical level. If you want to nibble here, you want to nibble on a share or two, or however big your portfolio is, maybe it's 10 shares, 20 shares, if you got a really large portfolio because of a $200 stock, unless you want to go mega overweight it, you better have a big time portfolio if you're going to start buying 10, 15, 20, 30 shares of something like that or more, considering the size of your portfolio. This is a logical area where you can nibble because you say, hey, this is where we initially bottomed, we got a rebound, and now here we are testing it again. The problem is, if you break 209, this is why I emphasize nibble. This is where if you wanted, let's just say you wanted 10 shares of this. Okay, you got $2,000. You want 10 shares of this. Right here, 1 or 2 shares, and wait and see what happens, because look, can this thing bounce at 209? Will it bounce from 209 all the way back to 270 in a day or two? No, of course not. Maybe. I mean, anything can possibly happen. But more logically, this thing will bounce from 209 back to 220, 225, somewhere in this range. That would signify some sort of a reversal here. That would give me more confidence. Okay, I could add 3 or 4 or 5 shares here. Again, as an investor, especially a buy and hold investor, trader, options trader, certainly you're trying to predict price to a much, much closer level of accuracy. With a long-term investor, you just don't want to get yourself stuck where you bought Alibaba up here at 265, 300, 319, and just shed off $100 per share. That would make you demoralized as an investor. So as a longer-term investor, you can kind of nibble here at 209. Don't mind that, because here you got to understand, if we break 209, okay, it is coming down. The odds of it coming down to 190 are pretty darn high. And if we break 190, the odds of us coming down to 170 are even higher. Okay, so there's a lot to take in here with Alibaba. Okay, it's at a nice level, but this is not a level where I would just, it hasn't totally bottomed down here closer to 170. This is where we bottomed, where most stocks bottomed at the end of March, early April. This is a level where if you get an opportunity, again with Alibaba here at this 170, love that spot. Okay, so 209, kind of like it. 190, like it even more. Love it down here at 170. That's my opinion on this one. Again, that's if you want exposure to the Chinese market, you want exposure to the Chinese government. Those types of things are difficult to predict because, as we saw, they levied them with a massive fine, and it really has hurt the profit. Since that fine and that type of action has been announced, this stock has really not reacted very nicely. And as we talked about, Over the last year, this stock is up only 9%. Look, that's solid gains in most markets, but there is a lot of stocks that are up way more than that over the last year, and certainly maybe even year to date. You've got stocks performing much, much better than this one. But it could mean that Alibaba's good days are ahead, since it has not pulled forward a ton of gains like we've seen maybe with an Amazon, a Facebook, and other stocks out there. So hopefully you guys enjoyed this video. We'll be back with more videos all the time. Thanks for tuning in. Good luck with your investments.